Economists have expressed positive sentiment towards South Africa's economic growth path for the remainder of this year. FNB has highlighted that the outcomes of the recent Reserve Bank's Monetary Policy Committee meeting confirms that some momentum is being gained into the second half of 2024. Stability in the rand exchange rate, increased activity in the residential sector, along with business confidence, have been cited as contributing factors. Economist Koketso Mano speaks to us about this. Thank you so much for your time, Koketso. I think let's start where we kind of left off last week with the positive sentiment that we were left with regards to the outcomes of the MPC meeting. How do you sum up what exactly it is that the South African Reserve Bank deems as the trajectory of South Africa's economic landscape currently?
Sure, and I think maybe just looking at their forecasts would be a good way to start. We did see in that that their forecasts for GDP growth have only been, slightly revised downward, and they can explain that. They've mentioned that the starting point is somewhat an issue. So it's stuff that has already happened. Say, for example, the first quarter GDP data, which was disappointing. They also did mention that, at the start of the second quarter, if you just look at the production data, you will see that there is some weakness that is lingering there as well. So as a result of that, they did, scale down their forecast for 2024 slightly lower. But I mean, that's a first half of 2024 story. Going into the remainder of the year, we are now sitting with, no load shedding or cessation of load shedding for quite some time. And that will be something that becomes very positive for production. We also know that if you think about, some of the confidence indicators, and you've touched on that in your opening statement, a lot of those near-term expectations, whether you think about the PMI, which is somewhat a leading indicator for the manufacturing sector, if you think about the other indicators that we also survey from FNB, so confidence across businesses, across consumers, near-term expectations seem to be a bit more optimistic. So from that perspective, we can expect at least the second half of this year to show us a bit more positive data. So as a result of that, and also the fact that, you are working with a lower base from weak economic outcomes over the past couple of quarters, that'll be something that supports growth going into 2025. The other positive thing that you can pick up from the MPC statement is around inflation. You will remember that their forecast for inflation has been downgraded or lowered from 5.1% to 4.9%. Once again, showing us that we're moving in the right direction. Price pressures are starting to slow, especially when you think about goods inflation, if you think about food inflation, the stronger rand is going to be very supportive when you think about fuel inflation. So all of these fundamentals are showing us that inflation will become less of a constraint when it comes to spending, supporting disposable incomes. So that should also be something that's positive. So all of that put together, lower inflation should be something that at least supports, as an interest rate cut, at least one, before the end of this year. But obviously, we know that is highly hinged on how the rand performs and some of the other risks to inflation that the MPC has flagged.
Loving this positivity, and we all cross fingers as South Africans, given the economic climate and what, the household budget is looking like. But I'm interested in the pace at which this is meant to go. What could be a spanner in the works?
Sure. I think, number one, we always have to touch on what's happening globally, because we are a small open economy, and we rely a lot on what's happening in terms of external demand. And unfortunately, there has been some sort of a divergence when you think about the recovery across economies. The economies that were more vulnerable to high inflation, high interest rates, are probably in a better place now with interest rate cuts coming into the system to show some sort of recovery. So that should be positive going into 2025. But there are other economies that were more resilient, like the US. Those economies are probably going to have a higher for longer theme in terms of interest rates remaining. And so that should weigh on that recovery path going forward. We also know that geopolitical tensions remain escalated, right? And that should be something that weighs on global activity. We already know that, the US elections are, showing us that, especially when you think about predictive polls, are showing us that we could have another Trump win this year. And obviously, what we all think about is how that's going to affect the global economy. Trump tends to speak a lot about inward policies, protectionism. So that could be something that weighs on global growth, in addition to the other geopolitical tensions that we've already experienced. And maybe just to touch on the fact that, we've already seen a little bit of a protection spin against China, China being one of our large trading partners. That would be something that weighs on our commodity prices, So these geopolitical tensions, protectionist trade policy is going to be something that is a very big spanner in the works when you think about global growth and inflation. The other spanner in the works, just around that Trump, or pardon me, the US elections, let me call it that instead, is the fact that, it could raise risk aversion, right? And so as South Africa with riskier assets relative to your larger economies, we could take a knock. And unfortunately, that could be something that slows the recovery in the rand that we've been anticipating and has been supporting this inflation trajectory that I've just spoken about in terms of the MPC projections. So there are a few spanners in the works. The last one that I just want to mention quickly is the fact that, when we speak to our internal agricultural economists, they are telling us that, we have experienced adverse weather conditions this winter, and that has affected fresh produce. And so unfortunately, that could be something that also slows the deceleration in food inflation. So quite a few spanners in the works, but I think the story remains positive on a broad perspective.
Thank you so much for that well-rounded view. Koketso Mano is an economist with FNB. That's where we leave it with her.